Meta, how are you?
Good. Happy to chat Nvidia. Lots of things going on in the world, though.
Well, your opponents did not show up, so I guess you won by forfeit.
I see Wes.
Well, he's not coming up to speaker board. He's scared. Oh, there he is. Wes, how are you?
Doing well.
Are you ready to rumble?
Should we rename this space so that it's not about Tesla? Because somebody might hop in and think we're debating Tesla.
Whatever. Let them think whatever they want. Who cares? Right? I don't know if I don't, it doesn't feel right for me to rename it to Nvidia Live. You know what I mean? I want it to be Tesla Live. I don't know. Call me emotionally attached to this stock. Who cares? All right. Omar is here. Meta is here. Wes is here. We have dozens of people in live chat as well. Thank you very much, everybody, for being here. We have gathered today to debate NVIDIA. We have two bulls and two bears on the company. I guess we can start a little differently this time. And I kind of want to start with macro. NVIDIA has historically been a cyclical company with lots of busts and booms, up and down, several 100%, sometimes 1,000%. Will this time be different? I wonder if Microsoft, Amazon, Google, other clients of NVIDIA having tens of billions of dollars of cash could lead to a different outcome this time. Meta, are you concerned as the NVIDIA bear on the board? Are you concerned that these companies being well capitalized could lead to capex spend continuing through a potential recession?
I agree that the clients that Nvidia has, unlike with Ethereum being a driver in the past, are not going to be sensitive to macro effects as much.
And on top of that, you have the secular tailwind behind NVIDIA, right? So when do you think the demand from Microsoft, Amazon, and others could stop growing as fast as it is today?
As soon as these companies have a good solution for inference, we would see a 40% decline in demand per NVIDIA's numbers about inference versus training.
Wes, do you agree with that? As soon as Microsoft has an in-house solution, we could see a 40% drop in demand for NVIDIA's chips from Microsoft, let's say?
Sorry, Meta, did you say just for inference or for training as well?
Just for inference.
Ah, okay. And your supposition is that they're wholly dependent on NVIDIA now, correct?
They claim they have this thing called brainwave, but yeah, I'm assuming they're basically using NVIDIA right now.
Right. And then you're also thinking that they would scale very quickly. So that's where the 40% comes from, like within, what, a year or two?
Yeah, let's say 2 years. As they scale up their ASIC production, as I'm sure, well, correct me if I'm wrong, but when you make an order for fab, you usually make an order in the hundreds of thousands of chips quantities. So it's not like you're ordering a handful. It's a large amount and it gets delivered in a large amount.
Oh yeah, that happens in milestones though. You don't start off with 200,000, but for your first production run, you would most likely start in like the 20 to 50,000 range, and then you work out any type of metal. Anyway, I could go into depth with that, but here I'll bore
Sorry,
the hell out of everybody.
ignoring the development cycle, once
Yeah.
the development is complete, the first actual production run is in the hundreds of thousands, correct?
No, that's probably like 3 or 4. There's always bugs in yield, even in production. So there's
3 or
different routes of
4.
production. So you go through like A1, A2, A3 after you get through your X1, X2, X3. It'd be great if that was the case, but it's never the case. You end up having to work out bugs in hardware.
Correct. I understand that. I
Yep.
guess what I was trying to say is after the development cycle is complete and after the bugs have been worked out, you have to order a large amount. It's not like you can continue to order
Yeah.
small
No,
amounts.
the line is built, it's line capacity, just like Tesla's automotive line. It has a certain capacity, and that you need to run it at that capacity or you don't run it at all. They shut the line down completely. So you have to buy in certain batches. And yes, it would be in the hundreds of thousands.
Okay, I posted a poll into live chat whether Nvidia is overvalued or undervalued. I would really like live chat folks to comment, reply with whatever they're hearing from the X space, whatever they're hearing from speakers. If you like a comment, if you liked the comment, say that in the live chat. If you disagree, say and also say why. If you have a question for the speaker board on NVIDIA, please pose the question as well. Wes and then Omar.
I think Omar had his hand up first.
Okay, Omar.
Well, I don't think that demand is going to decline by 40%. I mean, first of all, the business is just growing like crazy. So it continues to grow just like weeds. And, they said 40% of their demand is inference, but I don't think it's realistic to expect that they lose their entire inference business and no one uses these chips for inference. So there's just a ton of stickiness here, right? The best software is the one that already works. If I'm running a web service on, let's say, Ubuntu, and somebody says, okay, well, let's convert this whole server rack to run on Red Hat Linux instead and reset up all the software. It's technically trivial. There's no reason my, PHP MySQL app can't work on Red Hat instead of Ubuntu, but it's going to be error prone. It's going to be problematic. It's going to be a little bit of a headache. It's far easier to just sort of let the existing cluster run just because it's already set up, it's already working, we've already ensured there are no bugs. So there's definitely a lot of inertia and stickiness in NVIDIA's business, and I don't think their inference business would really evaporate overnight. Probably the longest term threat to the growth of the inference business would be more chips that can do LLM inference locally on device. That might slow down the growth of data center side inference, but I imagine even if something like that were to happen, you'd still see pretty strong growth on the data center side for inference as well.
Yeah, just to be clear, I'm not saying it would be like a step function 40% drop on the same day, but let's say I think we could assume if the large customer that NVIDIA disclosed ordering 20% of their chips is Microsoft, and 40%, let's just assume, also scales to Microsoft, then 8% of their demand is for Microsoft inference chips. And as they scale up Brainwave at some point, or maybe they start using Amazon or Google, which would be really strange for them to do because they have their own cloud offering, that demand could start to wane.
Yeah, and I would agree with Omar. And I think Meta's kind of saying the same thing, is that it happens over time. It's not a light switch. So this would happen over a period of, in my case, in my opinion, it happens over a period of years. But this is where NVIDIA really shines, because that takes a long time. And so that they can see basically the goal, the thing that they need to beat, and they just beat it. They've been doing this for almost 2 decades now. There's some places that they don't compete well, but this has been a sweet spot for them.
I disagree with that statement because NVIDIA was late to the matrix multiplication party. They continued to do vector matrix multiplication only up until the AI boom had already taken off, and now they're doing matrix multiplication as dedicated hardware, the H200s and so forth.
Yeah, I see what you're saying, and I agree with that. However, the point that I'm trying to make is different. Is that they have been the leaders, and they're continuing to be the leaders. That's the point. There's, in my bull case, is that there's no competition. It just simply doesn't exist right now. They have 99% of the market.
What do you think happens if Amazon and Google, let's say Microsoft can't figure it out, but the two of them drop the cost of tokens per LLM? Doesn't a lot of the load just shift over to those clouds?
It's not just the token count, and I think you know that. It's the entire process. So devs have to have more value overall, and there has to be overall business value as well. But at the end of the day, like, sorry, Omar, the Inferentia service from Amazon has been there for, I think, 5 years now, and it just hasn't taken off. Not that I'm aware of. So my overall supposition is that there continues to be not enough value and not enough developer value and not enough business value for companies to switch off of GPU for inference. And Yaman posted a link to something that talked about CPU for inference, and that's a very different type of inference. I think that's just running really simple, basic, like kind of shallow networks, if you can call them networks, and that's running on CPU, and it can be more efficient. It can hyperscale, but not neural networks, not any type of deep anything that requires a larger memory set that CPU just can't handle efficiently.
Omar.
Yeah, so I think Nvidia, they shared in their last earnings call, they've got about 80% of the AI chip market on the data center side. So there are AMD, there are others, there are Google TPUs, but they're the overwhelming leader. And, really just to kind of set the backdrop for what is this really about? Is this a bubble? Is this hype? Maybe there is some elements of hype, some elements of bubbles, but there really is an underlying economic trend that's powering what we're seeing in the market that is real, which is the emergence of deep learning over the last 10 years as a method to actually create this sort of digital superintelligence. And, we don't have a superintelligence today. We have relatively stupid AIs that think George Washington was black and that sometimes require us to intervene on autopilot. But we're seeing that we can create these digital intelligences, these digital brains. And what are they made out of? They're made out of silicon. We build them using silicon and we run them using silicon. And overwhelmingly today, that silicon is made by one company in Santa Clara, where I went to college, incidentally, and that company is Nvidia. So they are dominating both the training side and also the inferencing of those models that are trained on their hardware. Now, this is a business that looks like it is just going to grow astronomically. We're talking about really a synthetic replacement for labor. So if you wanted labor, you could only really go to the human labor market in the past. We're now looking at a future where these models will be able to outperform any economically valuable task, outperform humans in any economically valuable task. So this is really like a fourth industrial revolution scale event that is really the backdrop of some of this market excitement we're seeing here. And there's no doubt that demand for silicon is just going to continue to grow, both on the training side and on the inference side. Now, the central question really is NVIDIA going to continue to be the company that dominates that market, or is it going to fracture over time? Or
Just
is
one
another
second
leader going to
before
emerge?
we focus on Nvidia specifically. Wes, you mentioned that post I tagged you on. This was sent to me by Henry, who is also experienced in the industry, follows the industry closely. And the slide says next gen CPUs with instruction sets optimized for AI workloads. So is it possible that next gen CPUs will be able to handle more AI workloads than today's CPUs?
Yeah, potentially, but I've heard this for quite a while. Like,
Henry
They would,
asks, how much memory would they have to add for CPU to make a real dent in inference tasks?
it's more than just memory. Like it's the matrix multiplier inside of it, which is wholly different than the general purpose CPU architecture. Like
Meta?
it's just completely different.
Yeah, I was going to say, I agree with what Wes is saying here. CPUs are more about branching logic and really generalized operations. And what we're talking about here is GPUs that are really good at, usually traditionally GPUs were very good at vector and matrix floating point math. And what matrix multipliers, tensor processors, whatever fancy word every company's trying to come up with a different name, they're all just doing matrix multiplication at floating point operations. But at the end of the day, you can compare GPUs and ASICs, but comparing CPUs in the mix it confuses the situation, in my opinion.
I mean, parallelism is really the key. CPUs, your CPU might have like 8 cores or something like that, handling sort of 8 or 16 different execution threads. A GPU could have, you know, uh, way more operations running at the same time. So when you have seen other companies do custom silicon, like you look, for example, at Apple Silicon, which has an ARM-based CPU as well as a GPU on the wafer in an SoC, they've chosen to really do a dedicated ASIC for neural network inference. So they call it their neural engine. So it's not really running in the CPU per se, but you're seeing more of these CPU vendors, whether it's Intel or Apple or others, sort of have these custom functions to accelerate inference that they build into their laptop such that a MacBook can inference Llama 2 or something like that very quickly.
Omar, can you help me understand the following? So obviously, NVIDIA's chip demand is driven by demand for cloud services of Microsoft, Amazon, and others. What drives the cloud service demand? What are the top three factors?
So the cloud is an amazing thing because it allows anyone to access a world-class data center. When I was in college, we started this startup that would process police's crime data and try and predict what was likely to happen in the future. So we spun up some services on Amazon AWS, and we could go to these police departments as a little company with a software architected by a freshman in college, and we could give them a world-class data center that they could feel good about, right? So this is essentially what happens. You have VC money and startups and also more established businesses like even Netflix and companies of that caliber going to AWS, buying infrastructure from them, buying compute, buying storage, buying networking. You can have infinite networking. Infinite storage, right? So if I'm Tesla and I want to collect all this data, well, now I have to actually think about this data center with all these hard drives in it if
Right.
I'm operating it myself.
So,
With the
so
cloud,
Zoom,
I can just dump it all in there and just have all this data, and then it's there for me to train on.
yeah. So zooming out for a second, um, could business formations, the number of business formations in a year, be indicative of cloud services in the following year?
Um, I think that probably the lion's share of cloud demand comes from more mature businesses that are dealing with heavy volume. The startups are, a part of it, but they're probably going to be less material with business formations than existing business growth and their compute needs.
Meta, if you could identify, like if you could propose a couple of indications of cloud service growth for the following year, what would you be looking at? Like we're seeing what would indicate to you that demand for Microsoft and Microsoft Azure and AWS is about to tail off.
Total time that people are on the internet consuming or streaming data, whether that's in the form of AI interactions or video or audio, but not including time where people just like load a web page and they're reading the web page and the web page is not currently streaming information from the web. So you could either look at like total, I don't want to say bandwidth, but time of traffic being transferred across machines.
I mean, there's not much cyclicality to that, right?
There is
Yeah.
growth. There is growth there as you know, people start moving into uh, into like say VR world or other things like that. Could be growth. However, there does tend to be a pendulum where as bandwidth cost goes up, a lot of that workload starts to shift locally, and then cloud demand goes down.
Hmm. So it really,
Yeah,
I mean,
it's
okay,
really
so a recession, a potential recession, a downturn in the macroeconomy is not really going to be the primary. It's going to be more the custom ASICs development that could really hinder NVIDIA's growth.
If
Like it's not
anything,
in the same league.
it could be inversely correlated, because if there was a downturn, if I understand correctly, traditionally people start going to movies, but what's easier than going to movies is to stream things like Netflix. Might be easier to stream video games. People might use entertainment from AI more. So it could be inversely correlated, if anything.
Exactly. So how is that different from previous chip cycles? I mean, if you look at NVIDIA's and other semiconductor stocks, they go up like 10 times, 20 times, and then crash, right? So why is this time different in that sense? A recession could um, lead to an inverse correlation of the demand for the product. Go ahead, Meta.
I don't think it is different, because I think oftentimes what happens is these demand spikes occur, and then people project out as if that demand is going to be sustained for a long period of time. And then there's either a change in the actual compute needs, or there's a change in a shift from cloud to client, or some other kind of shift, which causes there to be an oversupply. Just like Wes was describing, it takes years to build up these pipelines. And by the time you've built up the pipeline, you're going to fabricate those chips no matter what. So you'd rather fabricate those chips and take a smaller loss by renting them out for less, and make your money back over a long period of time, than to not have the chips and not rent them out at all. So I think we're going to end up most likely oversupplying the cloud space, and then the compute cost, aka the rental of these chips, will plummet.
Yeah. Omar and now Wes.
yeah, I really see it as an area of secular growth. I think even if you see a big recession, you probably wouldn't see data center spending slow that much. A lot of these services still need to be running, it's really part of the fixed cost of the business for these companies. And you just have so much interest in AI that I think you probably continue to see growth in data centers right now, even if the economy entered recession.
Wes, if Microsoft, let's assume for a second that Microsoft is able to build its own custom ASIC and scale it rapidly, do you think demand from others could make up for that 20% drop?
What do you mean demand from others?
Like other smaller companies, let's say.
Oh, in other words, Microsoft extends this as a service, not just for their own inference and training.
Let's just assume for part A, just for their in-house training and inference, and then part B, if they offer it to others.
Yeah, I mean, I think it's worth saying this again, just to be absolutely clear. Let's say that Microsoft is doing this, by the way. They have already announced it. They already have a training chip and an inference chip. So that over the course of like the next 3 years is they're going to build out production pipelines so that they can actually do real work with it, not just research, like real adding customer value. While that's happening, NVIDIA is going to continue its march down the efficiency path. And it's only when Microsoft can more than like way more be way more efficient that they'll cut over. In other words, the developers have to agree and their business leaders have to agree. And then it's an incredibly large investment to do that. Jensen's just going to try to stay in front of that. And that's what he's been doing for, not just for AI, but everything. All the entire desktop and data center market for GPU, he's stayed in front. So yes, Microsoft is pursuing this for other reasons, not just to add customer and business value, but also to get to demand or to command better prices from
Okay, but
NVIDIA
you
and
didn't
to
answer my
command.
question. The question was, let's assume for a second Microsoft is 100% successful and scales tomorrow as an assumption. Can
Then yes,
that business
sure.
be replaced by other buyers of NVIDIA's chips, or would NVIDIA immediately see a major drop in sales?
No, I don't think so either. I don't think they would see a major drop. They'd see a minor drop, but it wouldn't be major because that other capacity is going to be sucked up by other buyers. The market is just too big for that. So I think it's worth saying again that these manufacturing lines and fabs are built out 5 years in advance. They have a roadmap that goes out 5 years, and then they have an actual like end user feature roadmap that goes out 18 months to 2 years, depending on what line of business it is. So this is something they plan for well ahead of time and then price accordingly. So they will just end up demanding more profit margin. So they just won't be impacted. This is what they've been good at.
Meta?
I'm curious in terms of, just to level set the debate, is the expectation from the bulls that NVIDIA is going to be able to sustain the current level of demand for like 5 years, 10 years? I understand that sometimes we're debating 1 year or 2 year. I'm just curious, if you see a drop in demand, where do you see that to be? And then we're just discussing timelines, or is it that we're actually just debating that there will be a drop?
Omar?
So, I mean, I don't expect this level of growth to continue forever. I don't expect them to have this level of pricing power forever. There's definitely sort of a shortage situation here, and the market dynamics are typical of a shortage. High prices, people fighting over supply, that type of thing. It's somewhat reminiscent of the EV market in the pandemic, actually. But I mean, they have twice as many orders as they have supply right now, according to their most recent earnings call. So they could lose 20% of their orders and probably not bat an eye. They probably have enough people to continue buying at 40,000. Now, if Microsoft takes away other customers and they stop using Nvidia and they start using Microsoft's chips instead on the Microsoft cloud, and they make it easy for them to port and do that, then that could be a bigger issue. You could see maybe them start to have to reduce their pricing. AMD has a similar product for about $20,000, half the price, but people are buying Nvidia for twice the price anyway. But the thing is, Microsoft isn't going to stop buying the chips, even if they have their own, because they have cloud customers with Azure. They have partners with like OpenAI that have huge workflows running on NVIDIA already, huge demand. If they can make it super easy to port from that NVIDIA infrastructure to their own, they may have a little bit of a business here. But there is a lot of technical complexity in any type of porting job. It's not just going to be a drop in replacement unless they really do some incredible work there. So I think that their cloud customers will continue to demand NVIDIA chips, even if their chips have started to enter service this year.
Meta, what do you think about that?
I agree. But what I would say is, if Amazon and Microsoft and let's just say these cloud providers, if these cloud providers have sufficient chips to service the demand needs today for their customers, they don't need to purchase more chips from NVIDIA. So while it is the case that customers will continue to have demands for NVIDIA chips, if the work, if the amount of work that's running on those chips is reducing quickly as it moves over to Inference, Brainwave, uh, Trainium, TPUs, all these different chipsets that are coming into existence, ASICs like the Trip chip, if these workloads are moving off NVIDIA chips at a faster rate than the organic growth of the workloads that are not moving off, then you will see a declining in rental prices of those chips, which would mean they probably won't be as profitable for the cloud providers, which would mean that they will stop buying them as much.
Do you guys agree that demand for AI chips will eventually converge to the growth rate of the cloud computing market?
I think it will flatten. I'm not sure if that's where we'll converge to at that point, but I think it will. There's a steady state of demand, and that will be the replacement rate at which the chips break once there's sufficiently enough chips in the data centers.
But the cloud compute market is also growing, right?
Uh, I I hold the position that the inference market will move completely off the NVIDIA chips, and only select forms of training work will remain on the NVIDIA chips. And the kinds of stuff that will stay on there would be academic research style stuff, not
Oh,
using
wow.
specific established practices.
That's a big call. Wes, do you agree with that? That all inference compute is going to move off NVIDIA eventually?
Not in the foreseeable
Let's say
future.
2030.
No. Oh, wow. Long way out. If I have to back calculate that, then still no.
You know, the thing is, like,
It's going to take a lot longer
2030
than
does
that.
sound a long way off, right?
It's
But
not,
it's
though.
only like, five,
Yeah.
6 years out. And 5, 6 years ago, we were talking about Model 3 in volume production and Model Y was starting production. That feels like yesterday, you know? And, the way this stock is priced today, you have to be talking about 2030s. You have to have confidence into that decade. If you don't, then current price is overvalued.
I don't
Well,
know.
I look at it
I
this
mean,
way.
you look at the growth, it
The
looks kind of
cloud
cheap.
solution,
No, if you're talking about a forward PE ratio of next 12 months, which is more of a CNBC, um, you know, CNBC talking head kind of topic. But if you're talking about DCF, which is your institutional buy side analysts, which is what really you should be talking about, 100 PE, you're definitely talking into 2030s. You have to have demand confidence into the longer term to pay 100 PE for a company. Like if I ask you, are you confident that Tesla's EVs will be in high demand in 2030s? Are you confident that Megapacks will be in high demand? FSD will be in high demand? Would you say yes or no? Or
Um, well, I mean, a lot can happen between now and 2030. I would think so.
of course, but given the information that we have today, do you think Optimus will be in volume production and deliveries in 2030s?
I mean, I would hope so.
Right.
It's hard
Can
to
you?
really
So
say with
let
confidence.
let me ask you. Let me ask in a different way. Which companies' products and services do you believe are going to be in high demand, most likely, Nvidia or Tesla, in 2030s, beyond 2030?
Hmm. Probably Tesla. I mean, I imagine, compute only gets cheaper and more plentiful over time, right? You look at Moore's law, every year you can get more transistors, you can get them for less money. So you're not going to have a situation where training compute is expensive and restrictive. You're going to have a situation where it becomes commoditized. And, Tesla, by comparison, they have a more product focused business. And they've built a brand that I think is a consumer brand that's sort of likely to endure. But anything could happen.
Yeah, I
Tesla's
mean
position
anything.
isn't
That's
secure
why I
either.
asked. That's why I asked the question with a probability estimate, like most likely. I'm not asking for certainties. Nobody knows, right? Both companies are, attached pretty much to their current CEO and the founder. So something could happen to them, right? But it's not the most likely scenario. But
Yeah, I mean, I
today,
expect
so I
Tesla to
agree.
grow faster between now
Yeah,
and 2030 than Nvidia.
yeah, and into 2030s. So I think every speaker on the board will probably agree with that statement. Tesla's products and services will have more durability in the longer term than Nvidia. We can say most likely. Okay. Yet the Nvidia stock is currently trading at close to 100 PE on a historically unusual quarter, unusually profitable, which we all agree is probably not going to be sustainable. It reflects the current imbalance between demand and supply. High margins, high revenue growth, and extremely high PE ratio, even though we also all agree that Tesla's products and services will probably be more durable, whereas Tesla's stock is at 47 PE. Meta?
Wes shared a link to an article that has a breakdown of the market share of the GPU space. And if I understand correctly, the models and platforms chart here is that if that's reflecting NVIDIA, we could probably use that to anchor the conversation around what could happen. Because in that chart, it shows OpenAI is using 39% of the chips, Microsoft's using 30%, but Google and AWS are only using 7 and 8% respectively. Yet, obviously, at least Google is competing with OpenAI. So what happens when that efficiency starts to appear in the other two?
Yeah, I mean, for example, just look at the most recent earnings call. Revenue up 265%, almost three times as much revenue as the year ago quarter. Net income up 768%, more than seven times. So this is what people look at and they go, okay, yes, the valuation's high, but you just sort of annualize their quarter here and you get to nearly $1 trillion valuation if you give it 20 times trailing earnings. And you look at the way this thing is growing, and yeah, the valuation's large, but also the growth is so large that if you blink, the thing is started to look cheap again because revenue and earnings have grown so much.
Do you
Meta?
think do you think that NVIDIA is going to be able to make more chips? Like, or do you think that their capacity for making chips is kind of peaked, and that's why they're raising their prices more and more and have a backlog?
Well, I mean, it's really TSMC, of course, fabbing the chips, and I think they have a contractor doing the assembly of the DGX systems as well. So, I mean, I think production of chips is only going to increase. The market has really put a big target on the back of Nvidia and everybody else in this space and said, "Hey, here's a bunch of value." So we're seeing everybody and their mom now try and get into this. Sam Altman says he's going to raise $7 trillion to build more chips. I mean, this is kind of the tone of the market right now. So
Wes?
I think you are going to see silicon production expand a lot.
Wes?
I think NVIDIA is maxed out right now, and like I was saying, their roadmap is long, and it takes a long time to spin up new manufacturing lines and fabs. So yeah, they'll definitely raise their prices as they see higher demand. We saw that during the pandemic. Like trying to buy data center chips from NVIDIA during the pandemic was like ridiculous. Prices were just
Meta?
nuts. So that will just to be clear, like that is going to play out over the next 3 to 5 years. Like I don't see demand waning until AGI is
Can you
solved.
define waning?
Like that's a very it's going to keep growing.
At what
Like
rate?
they have no
At what
idea
rate?
how much GPU compute they're going to need. It's like 50% right now
Okay, do
growing.
you think
AI
do you
data
think it's
center
going to be
compute.
50% growth for Nvidia for the next decade every year?
Until AGI is generally solved, it's going to keep growing at this rate. It'll be insatiable.
Unless
Like it's
Meta?
the
somebody
No,
biggest
hold,
prize
guys, hold on.
mankind has.
Can I, this, you know what this feels like right now for me? This feels like I'm on the dance floor and the person I'm supposed to be leading is trying to lead and it's as uncomfortable for me. I'm like, I don't want to dance with this person. Let me lead. Meta?
Okay, the reason why I asked that question is on the earnings call, Jensen said exactly the direction that Wes is replying, which is currently my understanding from and my interpretation from the call is they are supply constrained. And they also seem to be meeting their backlog at a faster rate than the backlog is growing, which is why I'm saying that maybe in a year or 2 years, that demand starts to fall because let's imagine a scenario that Amazon Google, Microsoft, all the major cloud providers have sufficient chips to continue to service not their own needs, but everybody who's their customers' needs. Would you agree that their customers don't have training needs for foundational models? They don't have massive fine-tuning needs, and they're mainly just going to be on inference. So they're very susceptible to be moved.
Omar?
Yeah, I think it's kind of interesting that what's sort of underlying a lot of the bullishness, if you sort of listen to Wes and myself, our arguments, it's sort of like this idea that you're going to need infinitely more compute to achieve AGI, which is kind of the working assumption today. That's the methods that seem to have really worked well. But technology can always surprise you, right? So what if there's some change in technology where you don't need massive training compute? Maybe there's some type of distributed thing where as it's inferencing it, it can maybe update the weights or something, something that hasn't even been thought of or invented yet. Or maybe these foundation models just become so powerful that there's little demand to train more models because the models have already gotten so good, or something else unforeseen. But I just think it's interesting to sort of identify that sort of idea that's underpinning all these growth expectations and the actual growth we're seeing is that we're going to need infinitely and infinitely more compute. And one of the interesting things about engineering is when there's a big burden on your back, like a big need for compute, engineers always look for some way to get rid of that burden. And I would not underestimate the creativity of engineers.
Meta?
Yeah, I think Omar's hitting the nail on the head here in terms of where my resistance is. For a long time, RAM was considered cheap. So engineers didn't really optimize for it. Then RAM became really expensive. People started hyper optimizing for it. Then CPU became the bottleneck, and so on and so forth. And in engineering, it's actually considered a good practice to not optimize things that are not the bottleneck and only focus on the limiting factor. So for a long time, within the oversupply of GPUs, that was not the limiting factor. And people continue to scale AI by just throwing more and more tokens at it.
Okay.
And sorry,
Meta, question for you. I really want to focus on things that you guys disagree on. Okay. Bull, bear, investment thesis, valuation discussion. So I need to get the fundamentals of that DCF into a debate format.
could I ask a question about where we
No,
think the
I'm
limit is?
asking the questions. Sorry. Okay. So let me ask you this. Google says 90% of its training is done on in-house custom ASICs today. Okay. In 2030, how likely, what's the probability of Microsoft and Amazon being able to say the same?
For me, 100%.
Okay. Now, Wes doesn't think so. Wes doesn't think it's 100%. Right, Wes?
Correct.
Wes thinks it's 50, 60%. And he believes,
Coin flip.
yeah, coin flip, maybe slightly better than a coin flip. He believes that there are only a few people in the world. Like, it's not a matter of bringing a team together, hiring these, bright engineers out of college, etc. It's a matter of like just the number of people who can solve this problem is limited in the world. So you
I
have
think
to
that
have very good people, the best, working on this for a long time. Only then you have a shot. It's not even certain. Whereas you think it's 100%. So go ahead.
the reason why I disagree with that is if you just change it into how long you're renting each chip, if the margins for NVIDIA are 80%, let's say they double to 160%, etc. As those margins go up, you don't have to compete on a one-for-one computational basis anymore. You can be one quarter as good, and you could buy 4 times as many chips. And at peak times, you can route your traffic across 4 chips instead of 1 chip that's 4 times as fast. Your throughput is still 4 tokens per second or
Okay.
per
Okay.
minute, whatever it
So
is.
Wes, Meta, what for the audience, what Meta is saying is that you don't need those best people in the world working forever to come up with the best chip, you can come up with a close second and undercut the leader, in this case, Nvidia, and still succeed and still cap Nvidia's profit margin. Do you agree with that statement?
No, it hasn't happened yet. I don't see any reason why that would happen. It's Nvidia's core business.
Omar?
Well, it seems inevitable, really. Like, I'm close to Meta on this. It's probably 100% that this becomes increasingly commoditized, just because you don't need each of those companies to solve it themselves. You just need somebody to solve it. And there starts to be some competition in the market. Okay, here's somebody, and we're putting these sanctions now on the export of these chips to China. China's going to be developing their own chips. Watch them just kick Nvidia's ass or something, right? I wouldn't underestimate them. Or some other player that we don't see just emerges and, they just go to TSMC too and they produce a better chip or, you can never know with technology. So don't the market is a powerful force and the market does one thing. When there's something that's valuable, it produces many companies that serve that
Right.
purpose and they compete to push prices down.
Wes?
It just hasn't happened yet in the history of Nvidia. They keep pushing the envelope. They're always ahead.
Wes, let me ask you
I just
this.
don't see any
On
reason why that's going to change.
AI specific training and inference chips like H100 or H200, is the gap between Nvidia and the second place getting bigger or smaller today?
A brief history in time. TPUs were better for about 2 years, and now NVIDIA GPUs are now better again. So they've again taken back the reins. So everything that kind of Google gained with that, I'm not saying has been lost, but as far as cloud goes, like Google selling those services to other companies, not so much
Interesting.
anymore. And it's back to GPUs.
Meta and then Omar.
I would say that's not correct. Two things. One, the chip replaced NVIDIA chips in the vehicle already in Teslas. So there are examples where NVIDIA basically is not competing as efficiently as it used to once before in the AI domain. And the second thing is, if you look at TPU5 paper, they're already doing cross data center work. And like Omar was saying, if you can find ways to scale down the needs, and mixture of experts has become like the way that everybody's doing it, then you remove this blunt force, everything's a nail hammer approach of just throw more and more data at it. That is not the way things are going. And even if you wanted to go that way, it seems like the models today are already trained with all the data they could get their hands on. So you may not even have more data to throw at it, which then suggests we're already at peak computational capacity.
Yeah. Omar, Wes.
So I think the lead is actually narrowing, not getting bigger. TPUs are great, but since really AlexNet to today, NVIDIA has been the dominant way to train models. And I think that, NVIDIA has dominated really since their birth. But the history of other microprocessor technologies, I think, are instructive of what we can expect in the future for graphics and AI compute. The great Jim Keller from AMD and Apple, he worked on some of the Apple silicon processors. He worked at AMD. He said, CUDA's not a moat, it's a swamp. x86 was a swamp too. And if you remember in the early days, Intel, it was like, oh my God, who can touch Intel? They're the greatest chip company in the world. And they've got x86, and Windows only runs on x86. So, of course, everyone's going to be buying their chips because that's what runs Windows and that's what runs all this IBM PC software. And for a while, they were just this amazing company. But then AMD came. At first, they put out a chip that was compatible, that ran the same instruction set, that was cheaper. Over time, AMD
Right.
actually started putting out better chips than Intel.
Right.
That could happen to NVIDIA too.
Right. Wes and then Meta has 9 minutes. Wes?
Yeah, and I got to bail at one too. So I love Jim. Like Jim's he's amazing. But he's incredibly biased because he's now the CEO of TensTorrent, which is ultimately competing with CUDA. So for him to say that is just, it's an incredibly biased statement. And while it may be correct, it may be not. That's for everybody to decide. But at the end, you know, CUDA is still like decades now. Like before it was CUDA, like it was still being used to develop on top of Nvidia hardware. And just to be very clear, like TPUs are still great, but it's taken what 8 years now for them to basically barely be able to kind of be used cross data center. Like it just takes an incredibly long time, and Nvidia continues to lead. That's the part that they're really good at. That's my bull statement.
Can I make a bear statement?
Sure.
I think there are three major headwinds that have not been addressed by the bulls, and those are one, computational approaches in terms of software can drastically reduce the need for the chips to achieve the same level of output. So if the demand drops for training foundational models, fine tuning, or even inference serving, that's one big factor. Two, we've seen things like Grok with a Q come out where there's different approaches that are completely different from even traditional ASICs that make it even more efficient to serve tensors. So that could also disrupt the market, where a different hardware approach that NVIDIA doesn't have domain expertise on could disrupt them. And then the third one is the shifting nature of demand, where lots of people are playing with these LLMs today, but it turns out probably most of the things you need are going to be sufficient in small models, and most of the interactions are going to be through phones and iPhones and Pixels and Samsung phones. They all have tensor processors built in now. So we could see a huge shift from cloud to client.
Wes?
Like I get the 3 points. I'll address them. So like the first one, the computational nature of being, you know, software can handle part of that. Like I'm all for modular AI and for making it more unified and for software to be easier to write so it can be more like spread across different types of hardware. That's great. And I'm all in favor of Chris pursuing that, and I wish him the best. And then that it just takes an incredible amount of time to do that. Like he's 3 to 5 years away from like massive production, I think. And then Grok with Q, my predecessor on TPUs, he went over there before I took over. He went over there to start up Grok, and that was in 2016. So it just takes an incredibly long time, and they're not even close to really having a product for production yet.
Okay, second.
So that's
answer
another.
the second point.
Sorry. Yeah, so that's the second point. And the third one, oh, darn it, now I lost my train of thought. What was the third one, Meta?
From cloud to client.
Oh yeah, we could definitely have a solution that handles distributing the workload, but unfortunately, like the interconnectivity of the chips are what makes them super fast. So that interconnectivity just isn't there. We're talking like, you know, picoseconds. You know, we're not talking milliseconds.
Regarding the cloud to client, I'm referring to the fact that those workloads that required large interconnectivity in the cloud for inference might just move to the device and not need to go to the cloud at all. Think of like voice recognition as an example. A long time ago, you had to always go to servers, and now you can just do it on device. Similar things are going to happen to a lot of things.
Makes sense. Meta, what was the second? Can you restate your second point? First, computational approaches software advancements can reduce need for hardware. Third is shift from cloud to client. What's the second?
It's about the fact that our computational approach in hardware could be done in a paradigm shift. So today,
that's the first one, right?
No.
All right.
Was that the first one? Okay, maybe I'm getting it then confused in order.
I'll reach out to you in DM. Before you and Wes have to go, I want to get one statement from you. While Omar talks, you guys can talk about, think about the answer to this following question. What would change your mind? Seeing what? would change your mind from bull to bear, bear to bull? Omar, go ahead.
So I think my answer to Meta's points is these things are not happening. Where is the evidence of a great breakthrough that reduces our need for compute? It's nowhere. Show me a paper and then maybe I'll reconsider it, but I haven't heard of anything that would make any of these things happen in a material level. The move from cloud to compute, I mean to mobile, cloud isn't going anywhere anytime soon. I'm not saying it can't happen long term, but these things simply just aren't happening today.
I'll send you some papers. I love sending
Nope,
papers.
you're done. The only thing I want from you is your answer to what would change your mind. Do you want to go first or Wes first?
Let's let Wes go first.
Wes?
The thing that would change my mind, yeah, and Meta can send out a paper because that would essentially change my mind if there was a new model type or a new way that like drastically reduced the amount of compute. And I know that like Hugging Face has one, and the name escapes me, but that would be one thing that could potentially change my mind. Realize that like that really hasn't happened since 2017, the original transformer model. So there's that. And then the other kind of major thing is if we solve a large part of AGI, like in solved means like it's in production, people are using it and they're getting great value out of it. It's not ChatGPT. Like that's not what I'm talking about. That is not AGI in any way, shape, or form. Like we can say that it, but that would be the other, just to keep this short, that would be the other thing that would sway my, because then we could potentially see a cap in demand.
Okay. Any final words from Meta or Wes? And then I'll continue with Omar.
You had asked what would change my mind.
Yeah.
If Nvidia, as they are now approaching setting up data centers for rental only, if they manage to get a good software API cloud system up and running, like AWS, and they serve more than just AI over time, but at least they start serving and becoming a cloud provider, that would change my mind because then they'd be vertically integrated and they could grab the margins from the other side. And the other thing that would change my mind is if the Ethereum crypto boom or something along those lines comes along and finds a way to make use of the idle GPUs.
Gotcha.
Hey, Iman, thanks for setting this up, and no more final words.
Okay, great. All right, we'll continue this again. I know you guys have to go. So Omar, let me ask you this question, kind of general question, a little bit more, building on what the two just said. Sounds like Nvidia is trying to replace Microsoft and Amazon, and Microsoft and Amazon are trying to replace Nvidia. Not replace, but reduce their dependence on the other side. Which side is more likely to achieve that goal in the next 3 to 5 years? Do you think Microsoft and Amazon are more likely to build a custom ASIC that meets 90% of their needs? Or do you think Nvidia is more likely to set up a cloud service and not have to sell to Microsoft and Amazon?
Well, I mean, they could convert to a cloud business, but it would really materially impact their business adversely. They love selling these GPUs and getting $40,000 of cash up front. What they don't like is having to wait a long time to get that money, deal with customers, deal with all the intricacies of a cloud, making sure you don't have bad actors, all that stuff. They could get into it over time, but their business generates huge earnings growth because of really these cloud service providers. So it would be a very different sort of structure to the business. You'd have the business, you'd have the revenue coming in, much more slowly over time, as opposed to this huge growth you're seeing right now.
So you're saying cloud service has low margins, doesn't have the high margins of NVIDIA's hardware sales, and therefore NVIDIA isn't too excited to get into cloud service. But on the other hand, if they don't take that step of vertical integration, Microsoft and Amazon are inching towards building their own custom ASICs. So is Nvidia facing a bit of an innovator's dilemma here?
I don't think they see the other chips as necessarily a threat. I think they can continue to dominate the market even with other solutions existing, and that's what they're going to try to do. So, I mean, they have an NVIDIA cloud offering that basically white labels the instances sold to the other clouds. On their last earnings call, they talked about really collaborating with each other, referring customers to the cloud providers. It seems like they're comfortable sort of designing the chips and white labeling the cloud service and letting the cloud service providers run it today. Now, in the future, if let's say the cloud service providers moved a meaningful amount of training workloads or inference workloads onto their own chips, and it did start to actually impact NVIDIA's business adversely, they stopped ordering as many chips, then yeah, you might see them set up their own cloud service. But the cloud services market is, highly competitive. There's a lot of people offering essentially the same thing. So they could do it, but I'm not sure they want to. It's a little bit of a headache.
Got it. Interesting. We're definitely going to have a part two of this because I think what you said about NVIDIA doesn't see custom ASICs necessarily a threat to their long-term business. I think Meta would probably disagree with that. Um, so on
I mean,
Meta's,
let's think about this on like the graphics side, right? So there's a lot of other graphics chips, so if I buy, for example, just an ordinary Intel CPU, they now have integrated GPUs. Apple now has their own integrated GPUs. So there's a lot of other GPUs out there, but NVIDIA is the name that is synonymous with GPU. And if you're a gamer and you want to buy a graphics card, it's probably going to be an Nvidia. There's the AMD, they bought ATI. They've got their Radeon card, so maybe you buy a Radeon card. Some of the Macs have those, but really Nvidia is the name that is sort of synonymous there.
I agree.
So
And I don't think anyone disagrees with that statement, but that was true for Intel and CPUs back in the 90s too, right?
right, so I mean, I think they can survive in a world where they are one of many training chips, and that is almost certainly the situation we're headed into. I'm not under any illusions that they're going to maintain 80% of the market forever. I think they could have 20 to 50% of the market depending on how things go and depending on how they execute. So, of course, their hold on the market's going to erode, but it's such a fast growing market that they can afford to have their share erode and still have it grow considerably from where it is today.
Do you see a trend emerging beyond AI that will benefit NVIDIA in the next 5, 10 years?
I don't see it yet, but I'm sure there'll be one. They're
Okay.
some of the best chip designers in the world.
Okay. And on Meta's first point, advancements in software could reduce need for hardware. You said that we're not seeing those advancements at this time. But how likely do you think that there will be a software breakthrough that will reduce need for hardware, let's say 30, 40, 50% in the next 5 years?
I mean, there are always software breakthroughs, and we never see them coming. So, our understanding of how to build software has evolved immensely over the past decades. And I mean, you think about some of the things like Bitcoin, cryptocurrency. That's kind of like one of those things where you're like, I never would have even imagined that. But now it's just a part of the world we live in. So, what are we going to see in the next 5 years, next 10 years? Definitely a lot of stuff we can't imagine today.
Yeah, so even though there's no evidence of Meta's first point, first risk that he identified to NVIDIA bulls materializing today, there's no evidence that it's materializing today, but it's likely, more likely than not, that it will materialize in the next 3 to 5 years, right? You agree with that?
Well, if you just sort of think about it like Elon, you have sort of a first principles reasoning, and you think about the limits of physics. And then you say, okay, human science tends to improve, our engineering ability tends to improve. We tend to move closer and closer to the limits of physics. And you can just see in human beings and other living creatures that we're able to learn, we're able to adapt to new tasks and have pretty powerful capabilities, but there's no data center attached to our head. So there must be some simpler methods of computation where, you don't have to have this paradigm of like massive data center training compute that we have today, right?
The other question I want to ask you is Apple is going to have an event in June introducing iPhone 16. I was watching Gene Munster interview last night, and he was talking about how Apple with iPhone 16 is going to bring um, AI to the phone. And I think that plays into Meta's third point, shift for AI compute from cloud to client. Omar, if I were on the bull side of NVIDIA, like you and Wes, we know what I would say when somebody says the growth rate will decline, this high rate of growth isn't going to continue for NVIDIA. I would say the estimates already incorporate that fact. Analyst estimates show very little growth on the earnings side for NVIDIA, the consensus estimate.
Right. I mean, that's why you keep having these crazy moves upwards is they just consistently beat the estimates.
Yeah. So Meta signed up for the Devil's Advocate tier on my Patreon, and I put together the bull case, and I published the first draft last night. And one of the things I realized is that, man, these like growth estimates is actually pretty low. So beating them isn't going to be very difficult unless one of those two main risks materialize, which is one, Microsoft, Amazon achieving a custom ASIC good enough to replace or reduce dependency on NVIDIA. And that's in the outer years. I think this is why Gene Munster is so positive on the stock, is that beating these estimates in the next few quarters for NVIDIA is not too hard. Or the second risk is something macroeconomic. But like we said, Microsoft, Amazon, and other major customers of NVIDIA are well capitalized. They have tens of billions of dollars of cash on hand, tens of billions of dollars of free cash flow, and there's a secular tailwind in demand for NVIDIA's products. So even if there's a downturn, these companies are going to continue to throw billions of dollars. So really, it all comes down to how likely is Microsoft and Amazon to develop their in-house ASIC? How fast can they scale? That's what this entire bull bear case, comes down to.
Yeah, or I mean, more broadly than that, how quickly does the market get commoditized? It doesn't necessarily have to be Microsoft and Amazon doing it themselves, but someone has to commoditize it.
Yeah, that seems like a low probability outcome, though. Like, do you think AMD or Intel or somebody else is more likely to produce a H100, H200 competitor? Do you think that's more likely than Microsoft, Amazon being able to develop their own for their own purposes?
I mean, anyone can develop their own. Like, we're talking about multiplication here, okay? That's all these chips are doing is a bunch of multiplication. You got a big box of numbers, and you're multiplying all these numbers by all those numbers. So it's really even less of a moat than Intel had, where Intel had this very complex instruction set with all these details that were very sort of specific to the Intel chip. And that was very difficult to emulate. Whereas what we're really optimizing here is some very simple operations just executed in parallel. So you're multiplying all the numbers together at the same time as opposed to one at a time. So it's very easy to make a chip that accelerates these functions. I have no doubt that Microsoft or Amazon or Google or Tesla or anyone who wants to do it can do it. There's no secret here. It's just multiplying matrices together for inference. And i- I think it's inevitable. We only get more compute more available over time at a lower cost in the history of the
I don't
industry.
know if that's the case. Like it is multiplication, obviously. It's matrix multiplication, parallel processing. And even though on the surface it's simple, Wes said the other day, the space where you weren't here, said it's really only a few people in the world that can actually solve this problem. It's not some engineering problem that just takes time. Like you can put very smart people in a room and they can work at this for years and they still have a coin toss chance of actually solving it. So I don't know,
Yeah.
and combined with what Jensen said about 30,000 parts or whatever he said about this H100 chip, and only 6 of them are produced by TSMC, it doesn't seem that simple.
Yeah. I mean, it's true that advanced chip design at this level, when you're talking about the highest performing chips in the world, there are a very small number of people who can do it. But all of these companies, whether they're Google or Facebook or Amazon or some Chinese company, they have enough money to hire those people. And there are enough of them, more of them coming out every year from, engineering colleges and stuff like that, that they can actually and are actually designing these chips and they're succeeding. So, yes, there is some truth to that. It can't just be any Joe off the street. You have to hire some of the best chip designers in the world to really pull this off. But fundamentally, it's just math. Anyone can design a circuit that can do it. Yes, it gets complicated when you then start looking at the cooling and the whole enclosure and the networking between the boxes and all that stuff. It gets very complicated, but there's no, you know, it's all well understood. There's no secret.
All right, maybe that's something we can dig into between you and Wes when he comes back. Um, what time are you taking delivery tomorrow of this Cybertruck?
2:30. So right after the space, I guess.
All right. So you're actually going to come to this space. I was kind of thinking, no, we can't do it. That's fine. We can continue this discussion tomorrow. And then the other thing I would say on the bull side, Omar, is Nvidia does share buybacks and dividends, but very, very minimally. And they certainly have the capital to increase that. And that could be another tailwind in the stock price. So in the short term, like in 2024 and possibly for 2025, it's really difficult to short Nvidia or buy puts on it, etc. to bet against the company. Very, very difficult, especially in 2024. So after having done some more research into the company and listened to a bunch of interviews, I definitely understand the near-term argument. On the other hand, um, I definitely understand Meta's take on longer term too. Like I totally agree with Meta on the longer term, 5 to 10 years, maybe as short as 3 years. But Wes is kind of convincing me, even in the next 3 years, Nvidia may have continue its leadership. Short term, momentum, unstoppable. Long term, Meta is certainly right, in my opinion. Um, and the medium term is kind of up for grabs right now. Do you have a price target for Nvidia before you sell your position?
Um, I'm more going off the vibes. So I probably just won't sell it even if it crashes. I like just holding things forever if I can. Because then every time you sell, you have to pay capital gains tax and you give the government a portion. So it's better to just let things compound. If you think there's going to be sort of long-term secular growth, my thesis on Nvidia and Tesla are actually pretty similar. It's all about this like explosion of AI, right? And you have this immense economic value being created. So it's justifiable to dedicate considerable expense because of the value it creates. So, I'll probably just hold it unless I see something really change in terms of their growth prospects for the future, where people don't need massive amounts of training compute to train these models, or something materially changes that I can't see today.
You don't think that point will be too late?
Maybe, but I, it's it's up so much. It's like it could go down half, and it wouldn't really make a difference.
Would you buy this stock today at the current price?
No, I'm not buying it today. I don't like chasing things that are running up, although it might have been a good idea to do that. Um, but I have a pretty large position. It's actually half the size of my Tesla position now, maybe a little more as it's grown. But it's probably one of my top four positions now, uh, which I'm comfortable with. I'm not trimming it. Maybe I should at some point, maybe take my cost out or something. But for now, I'm just gonna hold it. It like the worst thing you can do as an investor sometimes is just sell something that's shooting up. If it's taken off, if you're going to space, just sit on the rocket. And the median investor is a little bit stupider than you, so it'll always run a little bit longer than you think is realistic, I think.
You saw the post last night with Ask What the Motherans take on it, that he said Nvidia's worth $240 per share. He said that 6 months ago. But if you watch the interview, he says that, and then he says, I'm not selling my position. He said he sold half of it, and he's all holding on to the other half. And this is coming from, the I mean, he's like probably as theoretic as you can get to discounted cash flow analysis, you know? And he recognizes that in the interview as well. He says, this is probably irrational, especially coming from me. But, and I'm not, and exactly like you said, he says, I'm not selling my position, but I wouldn't buy it at this price. And he says, I know that's irrational, but the difference is, California taxes. So he doesn't want to kind of pay a bunch of taxes only for like 5 to 10% lower reentry price. I wonder how his view has changed since then, because I agree with that $240 per share estimate.
Yeah, a lot of people would tell me, "Oh, it's overvalued. You should sell it." I would say, "Yeah, maybe it is a little overvalued. I should sell it." Then it turned out to be really cheap. So things can surprise you in the
Well,
market.
I don't know. I don't know if I would jump to the conclusion of it turned out to be really cheap. Like the stock price went up, but that doesn't mean it may have just gotten more
Well, the
expensive.
top and bottom lines grew a lot, right?
But that's not the. I.
It looks
That's
cheaper.
correct.
It looks cheaper now that the top and bottom lines have grown.
Yeah. Well, there's a difference between if those top and bottom lines are sustainable at these levels, or if it's just taking a year longer for Microsoft and Amazon and others to build their in-house custom ASICs.
Yeah, I mean, I don't think this is going anywhere near term. It looks like it could just continue to grow. I mean, everything we've seen in AI has shown that just methods that scale with computation work really well. So that's what everybody's doing. That's what's in fashion these days. Really simple general methods that scale with massive amounts of computation, because that allows you to just ride the wave of Moore's law and just get better and better results because we have more and more compute and more data available to us over time. So it's hard to really see that changing. And
Is
I believe these guys are going to succeed, but I don't think it's going to materially change the overall picture. I mean, their growth will probably slow a little bit. They'll have less pricing power, yes. But could the market be 10 times bigger than it is today? Absolutely.
Is it true that Nvidia had a couple of near-death experiences in the past?
Of course, every company has.
Like in the last ten years or so?
Yeah, maybe the crypto bubble, that type of thing. Um, I'm not sure I follow the company's history that closely to identify them all, but there have definitely been moments where things haven't been going so well.
Yeah, in 2022, I'm looking at their net income per quarter is less than 1 billion throughout 2022. That was only 2 years ago, you know? 18 months ago, this company was making pretty much no money.
Yeah, crazy.
What if that's the norm when this supply demand imbalance resolves itself?
It could be, but I don't see the AI training data center demand going away. It actually seems like it's growing a lot. I mean, you saw this investment just today. Now, Figure, Nvidia, OpenAI, they're working together. So they're doing all these things. They're going to need more and more compute to train these models.
I
There's going to
agree,
be
but
more.
you could have said the same thing 2 years ago about Rivian. You could have said EV demand is not going away. Long term, we're going to EVs, right?
Yeah, I mean,
Just because the
you know,
sector is
EVs
going to be
EVs are
there.
EVs are continuing to grow, of course, even despite a lot of macro headwinds. So I think, yeah, there is looks like a demand for more and more and more compute. And of course, that's not a sure thing, but I haven't seen anything to convince me that that trajectory is about to change.
I agree with you, but that doesn't mean Nvidia is going to be able to charge these insane margins. Like, what's the probability of Nvidia's margins going back to its long-term average of about 20%?
Yeah, I think that probably is where their margins will be long term.
And then
And
AMD CEO says the market size is about $400 billion, and Nvidia currently has 90% plus. Where do you think that shapes up in 2030?
I think it could be a multi-trillion dollar market.
So you're saying AMD's CEO is off by 10x.
Is she saying that's the size of the market today or in the future?
She said in the future, $400 billion.
Yeah, I think it could be much bigger than that. I mean, you look at Tesla this year, they're spending $2 billion on training compute. Now imagine when they actually have all these self-driving cars in the road, millions of them, and the need to train these models is so much greater. The economic value being created, I think I see is in the trillions. So the tools that create that value would also be quite valuable as well. It would be justified to spend trillions of dollars when you have many trillions of dollars of value being created by these models.
Sure, the inference of these models is going to create trillions, maybe tens of trillions of dollars, but that doesn't mean training demand for H100s is going to grow as much. And I think everyone agrees that it's easier to replace an inference chip. It's easier to design an inference chip than a training chip. You agree with that?
Um, yeah, I mean, the data center is more complicated than something that's just a standalone chip, I think. So yes.
Yeah, so when you say AI is going to create trillions of dollars of value, that speaks more about inference chip demand, right?
Well, both training and inference. And there will be a lot of centralized inference happening. It's
I,
probably more efficient to do inference in a centralized way.
but okay, let's kind of, if we kind of turn this into a bit more Tesla discussion, you train FSD once, and even though FSD is going to continue to get better, once you have full self driving, There's not going to be like you have really good full self driving, point A to point B, safer than a human, faster than a human, more convenient than a human driver, even the best driver on all those fronts. After that, there's no need to pay Nvidia another $10 billion for training chips.
Well, you always need to continue to make things better. So, what you'd be seeing, for example, is people having their cars scratched, maybe hitting things sometimes, maybe even, loss of life occasionally, that type of thing. These things would they would continue to improve the models, they would continue to train them, and they would want to invest probably in a lot of compute to handle both the data volume, which would be probably orders of magnitude larger, their training set and everything like that, to be able to train and converge the model quickly and get it out in a timely manner. If you have double the compute, you can get that fix out faster, and that would support growth in silicon.
We have 5 minutes, Omar, before machine comes here and the quality of discussion just slashes by 10th. So, is there anything you want to discuss on the higher intelligence IQ level before machine steps in?
No, not really.
Okay.
I'm just thinking about my Cybertruck. I'm taking delivery tomorrow, so that's all I can really think about.
Did you figure out the financing part of all the things you said
Yeah.
yesterday? It was
I don't know what was
cumbersome.
going on, but they finally just confirmed it all, so it's all good now.
Okay,
Everything's
good.
paid for. I just have to show up now.
Mike?
Thanks, Yaman. So Omar, as FSD, the model improves, isn't at that point, it's more about, I forgot my question. It's more about not necessarily the compute to improve it, but more in the value of the disengagements. So that's something that I wanted to ask. Not necessarily having 5 million Teslas driving and FSD in shadow mode for those that are not in the beta program. Isn't ultimately the value chasing those nines, isn't ultimately the way to get it closer to 100% accurate in the human disengagement? I mean, essentially, it's a fleet of debuggers. It's a debugging program, the ultimate debugging program where you don't have to pay your debuggers. Isn't ultimately when FSD is so good to continue to separate from competitors that ultimately are going to get there also? Isn't the unique asset in the human drivers as they disengage?
Well, I mean, increasingly people aren't even disengaging. So disengagements are not going to even exist in the future. You're going to continue training the system forever, and it's going to continue to get better forever and ever. As you get into more and more rare events, you get into a elephant on the road or whatever, you're always training it to get better at something, right? And the world is always changing. You're not going to have the data set from 2023 and use that forever. New things are going to emerge. There's going to be a kid on a flying skateboard or whatever, or a jetpack that's not in the training set, and we're going to have to continue to add those things into the training set, right? The roads are going to evolve as autonomous cars change the surface of the world and the way we interact. New things are going to emerge, which we haven't thought of yet. So there's going to be a constant need to continue training this thing forever.
I think Meta would disagree with that. All right, I need to type this question. You're dropping some bombshell statements, Omar, today.
Yeah, I mean, you always want to train better and better models. I don't think Meta would disagree with that part.
Yeah, but would you pay billions of dollars of capex to Nvidia for that last, the 10th nine? In the Marshall nines, you have 99.999%. For that seventh nine, would you pay $1 billion of capex to Nvidia?
If I'm generating $1 trillion of revenue from these AI models, would I spend 5 billion, 10 billion On training compute a year? Sure, why not?
I don't know. All right, what was the other question I said? You said something earlier. I said Wes would disagree with that. I think you said something like, I have no doubt they will figure it out. They meaning Microsoft and Amazon, right?
Yeah. I mean, they've already figured it out pretty much.
Why isn't Google selling TPU services to others? Or are they
They are.
offered?
Yeah, they are.
Okay. And
Through
Nvidia is
their
still
Google,
dominating.
they have their Google Cloud offering. I mean, they don't sell the chips. I can't buy it and put it in my own data center, but I can rent one on Google Cloud and use one to train my models. But nobody does that.
Why not?
TensorFlow, well, it's just kind of fallen out of fashion. They've kind of fallen behind in AIs in many ways. People don't use TensorFlow anymore. It was too wordy. You had to write all this bullshit. People moved to PyTorch. PyTorch was simple. It was easy, and they used NVIDIA GPUs. And there's, it's kind of like a what's cool kind of thing, right? Because everyone's using this, they're publishing their projects, it's optimized for this. Then you want to, play with what they did and train it on your hardware too. So everybody kind of ends up using the same thing so that they can collaborate together. And you know, TPUs just kind of fell out of fashion, except really at Google, where they eat their own dog food. But you don't see a lot of other people using TPUs.
Do you see even Google engineers asking for NVIDIA's chips in the future?
Um, if they, I mean, maybe they wouldn't be as far behind if they were just using the same chips as everyone else. I don't know.
All right, I'm going to ask that to Meta. Because Wes said the same thing about half hour ago. He said TPUs were ahead a couple of years ago, and then NVIDIA passed them. So that invalidates the assumption that just because Google was able to create TPUs, Microsoft and Amazon will be able to do the same. Okay, I'm starting to really get the differences between you three a little bit more now.
And I would just say, big picture here, I believe more toward Omar in the sense that they're going to be training these things forever. That's just the nature of managing algorithms. You always have a new update. You're always going to make it better, or things change. We call it non-stationary
No
information.
one disagrees with that statement.
So the question
These
is,
models will always be trained. We
yeah,
all agree with that.
the question is, do you keep needing more compute,
Yeah.
right, over time? And that's a harder question to be definitive about, in my opinion, because on one hand, you're going to always want larger models as your compute, as the opportunity to buy compute goes. You can have larger models. Your inference compute gets more efficient. So it's allowed to manage larger models, which will be more accurate. And so there is a bit of an appetite to make the models more complex over time, as we've just seen historically, probably with basically any algorithm. And that by itself would increase the demand for compute. However, at the same time, if you're training in a way that's working off of what you've done in the past, then you don't have to train from scratch. And if you're not training from scratch necessarily, then the extreme of that would be just the marginal compute. Let's say you've trained an algorithm that's really good, to drive, and that took 10,000 epochs of training, and now you want to update it and make it a little better. Maybe you only need 10 or 100 epochs, and for the marginal training, in addition to what you've already done. Now, if you're closer to that, then you wouldn't need more compute. You could use what you had, right? So I see both sides of the argument that you would need more compute over time versus no, once you get a certain amount, you're good. So if I had to bet basically the hedge there is I would assume the growth rate of your compute will certainly taper off. It won't necessarily go to zero, but it's not going to be certainly a 10x every year like they're trying to do now, right? They're trying to go up an order of magnitude. There's no way that's
right, but that's not what's priced in the stock.
You're talking about Nvidia?
Nvidia stock prices modest growth for the coming quarters.
Nvidia prices, right? They don't price explosive growth. So
yeah,
I don't. That's why I don't think Nvidia. Now, by the way, I sold my position, the rest of my position today.
Okay.
Just because I'm trying not to be greedy, I have I'm using options here, right? So I have leverage. So I make
that's smart.
More money, but it's more risk. So don't be greedy. But I don't think I certainly would not short Nvidia at this level with the information we have. I just think it's kind of neutral. I think it could go up still because I don't think it has high growth rate embedded in the stock. And you have these people, if there were no competitors, people would still buy Nvidia chips in the future, even if they already have a bunch. The growth rate wouldn't necessarily be high, but their forward PE ratio is not that high to begin with. So, like if that's the base case, like I still think like buying Nvidia shares and holding for the long term probably still a reasonable thing to do.